All right, good morning once again, everyone. Thank you for being with us today. It is Thursday, May 28th, 2026. Today I will be hosting our folks over in the pit room. So welcome to you folks. And of course, our loyal community here in the Polaris Trading Group arena. Great to everybody have on board. I'm filling in for Manny today. So hopefully I'll do as good a job as he does. So today is Thursday, May 28th, 2026, and this is our audio edition to the Daily Trade Strategy Briefing. Before we get going, the industry regulators require us to show the NFA Compliance Rule 2-29C, subparagraph 1 disclaimer. You all are aware of the risk associated with trading. Trade with money you can afford to lose. Past performance not indicative of future results. All right, John down south has good ears. Excellent. You got your rabbit ears on? All right, good. Everybody see our charts here in both rooms. Want to make sure that we're broadcasting properly. Number one. Okay, thank you, Delphine. Super. All right, and same thing in our room. All right, terrific. So one of the, I know, I believe it might be you, Delphine, or some others in the pit room have asked a bit about the 3-day cycle and so forth. I have in the past posted some links there if you need those. Once again, be happy to post those links shortly. I also have, I created a short video recently explaining the 3-day cycle, and I'll post that link as well in a few. All right, but in terms of what has been happening, just a quick review. I always like to do a quick review occasionally. All right, obviously the market's been in a fairly decent range. Okay, great, Delphine. All right, so she says interested in the cycles and in the work there. So we'll post those links shortly. If I forget, please remind me. Right. So the market's been in obviously some sort of a decent trading range. Again, probably waiting out, the resolution if there is going to be one there overseas. But all right. So here's something that I want to quickly get across. All right. And for those of you that are familiar with the 3-day cycle, this past cycle. So let me just outline this quickly. Right. This was a cycle day 1. Okay, this was a cycle day 2, and then yesterday was cycle day 3. All right, so now we're beginning a new cycle day 1. So again, the premise of the cycle, number 1, is to establish a low from which to rally. So on cycle day 1, that was the gap up on the shortened holiday, and it established a low here. And these blue lines here are the prior. This is the prior low, and this is the prior high, right? So look one day back, okay, and that's what these lines represent. So on cycle day 2, all right, prices came down and retested, all right, that cycle day 1 low from the holiday. Successful test there, so we would be looking on a successful test there. We're looking for what we were referred to as a buy response. Right, so that BR there stands for buy response, and price did elicit a buy response, right, at that point. So that would be cycle day 2, and then from that point, so what does this mean? This means that even though the cycle 1 low was established during that holiday, the market needed to confirm that that low is a more important low. And how do they do that? They go and retest it. So that was a high probability play back on cycle day 2, right? The idea there is establish dominance if that level is going to be supported, which it was. Then the next process in the terms of the dynamic of the cycle is to rally. And so it did that very confidently there going into cycle day 3, a little push. Turned out to be a little bit of a bull flag formation. And then the market pushed up once again. And again, this is the cycle day, this blue line here, okay, again, that is the cycle day 2 high. So what happened there on cycle day 3? It tested the cycle day 2 high, but failed. So one of these scenarios within the context of the cycle is to not only rally on cycle day 3, but get above the cycle day 2 high and maintain dominance above that level. Okay, so that would be, push higher, pull back, hold, and then continue on. On the opposite side, the failure of that, which refers to, again, a lot of people refer to that as look above, okay, look above and fail, with an R standing for reversal. We refer to that as a PKB, right? That's our terminology for it here at Polaris. PKB stands for peekaboo, all right? Kind of think about it, you're just like peaking above a level, right? And then not really staying above that, and then your head comes back down, your eyes come back down below the level. So you're just kind of peaking above that level. So we call it a peekaboo. But basically, it's the same thing, a look above, fail. Um, and if it does not sustain a bid, then we're looking for a reversal. And that's what obviously unfolded yesterday. Okay. And then, of course, and again, we spoke about it in our community yesterday as well. The expectation was a rotation all the way back down to 20 to the 17s, right? Of course, it ended up doing that. All right, so this turned out to be a pretty solid cycle. And again, when you review the cycle dynamics in the video that I'll post shortly, you'll see if you take a look at the past 3-day sequence here, match it up with the cycle dynamic, the template of the cycle, and you'll see that this was an absolute textbook cycle. All right, so what does that do for us? And again, the cycle helps us, gives us context on the rotations, the potential rotations, anyways, in the market. Okay, so the market, of course, ebbs and flows, etc. So now coming into today, let me just clear the screen here for a sec. So coming into today, the new cycle begins. So in terms of the what we expect for a cycle day 1 is we're looking for some magnitude of a decline from which to establish a low, as I stated earlier, and from which to rally. So what happened overnight? So overnight here we got a decline. So the market closed up at this area here at the 54s. Market got a decline. It breached or violated the yesterday's low, and it went down to what we referred to as a D level. Right. This is a very important area for us. But if you kind of think about it as well, it's a look below now, not above. Look below and fail, right? Reversal. So again, that is our PKB, peekaboo style trade. All right. So again, many people refer to it as the look above, look below. We just use the acronym PKB. It's kind of fun to think about. Ooh, little peekaboo, peek above, peek below. It's kind of fun. So what's the play there? One is a reversal back up through the low, or entering long on the D level, and then coming up through the prior low, which would be another long trigger. And of course, that was early in the morning during Globex, so the Globex folks had a nice little trade there. But for us this morning, all right, that we're up early, we had a retest. So again, what I'm talking about, these patterns. These patterns are very, very structured, and the market is actually behaving in a very anticipated way. So the market's just not gyrating all over the place. There is structure and form to it, right? So as we enter the RTH session here today, for us, our line in the sand, I produce a line in the sand each day for our community, and that line for today is 75.40. Okay, so that basically is, bullish above, all right, bearish below. All right, so that's kind of where we stand in terms of the outline coming in for today. Again, taking a look back a little bit gives us some perspective of where we are, but for the most part, the past few days, we've just been in one wide range. Very tradable, some very good opportunities throughout that period. All right, and that's how we stand on that. So pushing that over to the side, this is the chart that most of you are perhaps familiar with when I post on a Wednesday. Is we're looking at some various strategies that we run in an automated fashion. The two middle charts here, all right, this is our ATR strategy, okay, and again we get some different settings there. And then over here, this is our CCI crossover, which also we've referred to this as premiums and discounts. Okay, so we'll discuss those as the morning unfolds. But right now, and again, they can have opposing positions. So the one down below here on we call this the A4. That's currently in a long position, and then the one at the top here, all right, that we call that an A10, and that currently is in a short position. Okay, and the one on the far right now is in a discount long. So a discount is a long. A premium would be a short. All right, so that's the lay of the land on our charts here in the pit room, and everybody in our community here in PTG already is aware of all this. So a quick explanation for you guys in the pit, and we'll get right on it right here. So if anybody has any questions, comments as the day unfolds, let me know, and we'll get to them. All right, expectation for today, given the overnight action, I am looking for a bit of rotation back and forth as the market kind of finds its way. Since the market has generally been in a range, that's been the dynamic, and so we'll continue. We'll continue with that kind of dynamic feature. All right, and then what we do is we outline what we refer to as our sandbox. And a sandbox is just going to be our active range that will be looking for trades, right, to unfold. All right, hopefully that's clear. Kind of gave you the fire hose outline of this, and we'll see how the morning here unfolds for everybody. All right, so push up. We got the as you can see here on our A10. push up on our A10 on the top middle window. We did take a short earlier, as I mentioned, and we got a rotation back down. So we got target 1. And then that blue line up there, okay, that's currently where our stop is at. That is a break-even line. All right, so I know exactly as the market scales, I know exactly where my full break-even point is on my position automatically. It automatically calculates that. All right, so that's a very helpful tool for us. And what you'll see is if we get the next target down, that blue line will actually rise, indicating that even the break even is even further away. So that would be a full break even if something happened and the market ripped higher, right, where that stop is. So that, again, that helps us manage the risk. A lot of people move their stops very fast, very tight, and again, we can have a discussion about whether or not that's you know a good thing or not. I think it's an individualized um, way of managing. I like to manage in terms of where my risk is on my entire position, and with this, I have to be willing to give away my entire whatever unrealized profit I may have or realized profit in that event that something crazy happened, right? So at least I know where my break even point is. All right. So now notice here, we just hit off second target. Now notice what happened. Where's my break even? So my break even here on this short was originally here where that stop was. Since I got target 2, look what happened to the break even line. So this becomes my entire break even on the position. Not that I'm going to need that. Certainly don't think we will need it, right? Because we've already scaled. So now with this, I can move my stop to the entry point. Okay, so from at this point on, now I'm totally risk-free, managed all the risk out of it. We've already pulled some profit out of that trade, and now we're just scaling on the balances of what we have. Okay. Now on the flip side, the auto long here that we took, okay, did get stopped out. Okay. What time did that go short, Stu? That was, looks like about 9 o'clock, just ahead of 9 o'clock, 8:58 Eastern time. 8:58 Eastern time. Okay, that was the entry. All right. So now what we can do is we can just continue to manage the trade. If the market wants to go lower, all right, we still have that next level, which we should get hit here, filled. There it is. Okay, we got filled on the third target. Now what we have is we have a runner. Okay, we still have a stop on the final contract, and we have a runner now. So now what we can do is I'm going to manage it with the A4. So the A4 on that same chart, that yellow line, that's the A4. So I'm going to use that as a management tool, right? So basically now I'll bring my stop down to right above that ATR 4. And now I've totally locked in the trade. right? So book the trade. No matter what happens, we got some level of profit in there. Where does it show my P&L? I don't show my P&L. Again, we can have I think Manny and I, once we had a long discussion about this at a previous session in the room, but I do not show my P&L. All right. I do not know. I do not have it on my screens anywhere. I mean, I could look at my accounts, but I don't choose to. I think it's regressive to be thinking about your profit all the time or your loss. I think it's regressive. I think what what you need to do is just focus on executing your plan. No, you got to focus on executing your plan and staying focused on the process rather than your P&L. Okay, so that's something that. And when I was a market maker years back, quick story. Not going to bore you with lengthy stories, but when I worked for UBS, United Bank of Switzerland, as market maker, um, I was the head trader for the biotechnology healthcare group, and I had 6 traders that I was responsible for underneath me, and and this was company policy actually, but only the head traders, the management, had access to the P&L screens for all the traders. So me being the head trader of the biotechnology healthcare group, I I knew what all our traders were doing that were I'm responsible for. There were 6 traders underneath me, and so they were all responsible to trade individual stocks for themselves, right? For the firm, and so whatever their P&L was, they didn't know what it was. They had no access to it. They had a sense of what if they were doing well or not for the day, but they had actually no access to the actual numbers. And as a market maker, you're basically flipping stocks back and forth all day long, right? Doing your market maker duties for the firm. And so, the turnover was, thousands of percent, right? You're not just, it's not like what we do here where we're taking a position and we're holding it for a directional move. As a market maker, you're constantly buying and selling both sides, right? Throughout the day. So they never had access to their P&L, only myself. And the reason for that is, and it's the way I conduct myself here, is I don't look at my P&L throughout the day. I mean, I have a sense of what it is, right? But I'm not going to show it. I don't really even look at it myself. Maybe midday or at some point. But the idea is I want to stay focused on the trades um, rather than what loss do I have or what gain do I have, right? So if you have your market monitor, your DOM or chart trader or whatever you use for execution, and you see the P&L on it, okay, be sure to, again, just a suggestion, remove it. Remove it from your screens. Try to focus on the process. Try to focus on the trades, management of the trades, execution of your trades. Don't worry about what the P&L of it is. Right? So that's a recommendation that you know, that I would certainly provide everybody. Delphine asks, how do you determine this is cycle day 1? I understood the model. It has 3 days and it restarts, but how do you start with a day 1 during the week? Is it not related to Monday, Tuesday, Wednesday, etc.? So yes, it is not related to days of the week. Okay. The amount of data that we have on the 3-day cycle. So let me move over to the 3-day cycle screen here for a sec. All right, so this is our 3-day cycle screen. One's on the NAS is on the left, ES here is on the right. And you can see here it is a cycle day one. So how do I determine that? Well, why is today a cycle day one versus any of the other days? Okay. Um, so there is kind of a starting point that happened, when we first began. This was about 15 years ago when my partner Richard and and actually he started it, but you kind of have to start off with an assumption of what day it is. You don't have to do this, right? But this is how it began. And then there are certain criteria or expectations of what each cycle day unfolds as. So in the very beginning, you probably let it run for a few weeks, and then look back and said, okay, this corresponds to a cycle day one outline of what George Taylor originally wrote about. This next day outlined a cycle day two, and so forth. So Richard sets up the day. Now we are very pure in terms of the cycle, meaning that today is a cycle day one, tomorrow, Friday, will be a two, Monday will be a three, next Tuesday will be a one again, and so forth. So it's not the days of the week. Okay, Delphine? And then another kind of caveat to it is if it's a shortened session, so we had on Monday, it's a shortened holiday session, as long as the futures have a short session, the day counts. So the only days that really don't count are Good Friday, first of the year, Christmas, if they fall on a weekday, 4th of July. Those are the main ones that don't have a shortened session. So there's no day count there. But if there's anything that has a shortened session on a holiday, the days still count. Now, others out there that utilize the Taylor 3-day cycle, and you know some of them who they are perhaps, and I won't mention their names, very popular people, you know who they are. They kind of retrofit the various cycle days. In other words, if today is a cycle day one and it's not really corresponding to a cycle day one, as George Taylor outlined, and it looks more like a cycle day two, they're going to say it's a cycle day two. So they're constantly kind of retrofitting the day type for what the market is doing. Okay, we don't do that. We're very strict. We're very pure to George Taylor's outline, and the markets will, obviously vibrate back and forth and rhythmically. And so the expectation is like for today, right? The expectation is for some magnitude decline in order to look to establish, a low. Well, that occurred, during the overnight session. There it is right there, right? And then throughout the remainder of the overnight session, it rallied, retested, right? And then here we are. Here we are in the RTH segment. So for a cycle day one today, okay, has the criteria for a decline been fulfilled? Has it been met? And the answer is yes. So that's all that needs to happen. So from this point, question, is the overnight low right now the secure cycle day one low? We don't know that yet. We won't know that till the end of the day. But we can make an inference, an assumption that given a retest or a back test here, that is, odds still favor that these lows currently, right, this low and this higher low, are more important, okay, as a potential low for the day, but they're not necessarily secured until the end of the day. So as the reference point, all right. Atomic here says over in the pit room says, I have info from Linda Raschke on the Taylor book method from more than, let me open that up, from more than a decade ago. I shelved it, however, and didn't understand it. I understand it now, however, through your help. Oh, that's great. I've been using it for the past couple cycles. Super. All right. Yeah, the Taylor book, if you really are sadistic, uh, spend some time and read the Taylor book. If you really, really you want to, you know, make yourself go crazy. It's not an easy book to read and to let alone parse and understand what he was actually talking about. Um, but fortunately, my partner Richard on that um, went through the arduous process years ago and really was able to, I guess, decipher it. Just like hieroglyphics. Cuneiform tablets. What is it saying? What is he trying to convey? He was able to do that, and I think that what we put together. And let me while I'm speaking, let me see if I can get that document up. What we put together was, I think, certainly an easier understanding or outline of it, and so I'm glad that that's helping. Okay, so hold on just a second. Let me post this up in both rooms. I made a video, an explainer video called Master This 3-Day Cycle, and I think this would be extremely helpful understanding that cycle. So there's the link there for the pit. You guys here in PTG, hold on a second. I did post this out on X over the weekend, but might not have seen that. All right, so that is the link to master the 3-day cycle. And then let me give you the link. Copy. And here's the link to the website. There's a free document in there uh, that explains the cycle as well. There it is. So you may want to check that out. And uh, the explainer video was actually created by my assistant, Allie. Allie is my AI agent. And it was created by Allie from that document. So it's pretty neat the way AI can really help you these days. I'm still utilizing some ways of integrating the AI into what we do, kind of freshen up a lot of the stuff that we've had in our educational materials. All right, so that's kind of the 3-day cycle. And it's a short video, so it's in. But what I would say is, if you really are interested, okay, after you've watched this, we do offer a 2-week trial. Richard and I, offers a 2-week trial to get the spreadsheet, what's called the ebook, and explore it for a couple weeks, learn a little bit more about it, etc. If that's something that you're interested in. All right. Um, as our members know here, I don't do any hard sells whatsoever on any of our products, services, or anything else at Polaris. Right? We do our thing every day. We meet as a community. We work hard together, and try to navigate the marketplace, and hopefully come away with some profitability. All right. So if it's something that you're interested in, go ahead and at some point sign up for a 2-week free trial. We'll get it out to you, and no obligation whatsoever. But it will help you. All right. I think we're very one of only a few, if really truly the only one that has an electronic ebook, or the Taylor book method as it's called. I think we're the only ones that actually has a product. All right. That you can use. Now I know of somebody else, and again I won't mention anybody's name, because I think everybody that has that's trying to educate folks out there, I think it's great. There's obviously a product for everybody, and variations of everything, but there is somebody out there that has a sheet. But what you have to do with that one is you actually have to input levels. All right. And so unless you know which levels to input and how many, again, it's not as efficient. Our spreadsheet, our ebook, okay, we have 15 years of history on it. And with the 15 years of history, there, the ebook is automatically created with all the levels, all the targets. So as you go through the documentation there on those links, you'll understand what I'm talking about. Hey, Mark. Good morning. How's my audio today? Much better. I don't sound like Alvin the Chipmunk. Yes, that was yesterday. I couldn't save the recording yesterday, by the way. I was listening to the recording, and I just couldn't bear listening to myself. So I ditched the recording. So hopefully today's better. All right. All right. So that's the outline of the 3-day cycle. But as you can see here today, we basically have a range once again. And we're just kind of sitting right around the mid area of the range. So today, again, line in the sand today is our 75 40s over here. Right. So now this is what we do in terms of, I was speaking about a sandbox earlier. Right. So basically what we do there is essentially for us, what a sandbox is just kind of outlining, kind of just what a sandbox implies. Right. The kids, they're playing in the sandbox. Right. So again, I use these terms and visualizations away from normal trading terms that support, resistance, this, that, all these technical terms. I've always shied away from those over the years, because I don't think they're exciting. I don't think they're interesting. So I try to make things interesting in our community in terms of terminology and so forth, and in the educational process, because trading can be pretty darn dry. But really, the sandbox outline is simply For instance, what's the most recent range? Now we see all the big range, but what's the most important range? It's the most important range, excuse me, is the most recent low and the most recent high. Would everybody agree? This is the NQ one, right? The most recent range. So that's kind of we focus on. So this is the most recent range. So for us, this would be, right, our sandbox. Okay, this is where the market's been operating. Now what we can do within that, that's the, of course, the upper and lower edge of that. But then we can kind of, refine it a little bit more and say, well, within the context of that wider sandbox, what are some of the other pivot areas that can be deemed important, right? So we took a look, this is a 15-minute chart, but we can take a look at, these candle highs and lows and kind of draw a kind of an area there. Do the same thing above, right? You got a couple candle highs and a body high, right? Kind of draw that. So now this area here, right, becomes a bit more defined as our sandbox. So how do we use that? So once we've defined something, we've outlined it, that's great. Well, how the hell do we use it? Well, what we use it is the expectation here, at least initially, because we're kind of more in a range back and forth, as we can see, we're looking for, sellers to come in, or let me rephrase it this way, right? Let me ask a question. And again, most of the folks in our PTG room know the answer to this. But for you guys in the pit room, um, how is resistance? And I don't really like to use that term, but how is a pivot high or resistance formed? Further question to that is it that there's more sellers? Is that what creates a resistance? Greater amounts of sellers? Anybody have any idea in pit? I'll give you my viewpoint of it. Is a high is, okay, so shorts get stopped out. Okay, that could be part of it, yep. But what are shorts? What's happening? Shorts are buyers, right? So once you put a short on, you're a buyer. Once you put a long on, you're a seller. It's just a matter of where. Yeah, right? Okay. So a high is created not necessarily where there's the greatest amount of supply. Yeah, John South in our PTG room just posted, the buy is dried up. I refer to it as the last buyer bought. That's where the last buyer bought. Okay, there are no more buyers above that high print. And typically that high print, if you take a look at the order flow and footprint charts, there's very, very little contracts there. So that's where the last buyer bought. Okay, so that forms a high pivot. Some people would call that resistance. I refrain from using that term. How about on the low? Is that some people will call that support, but that's where the last seller sold. Okay, so if you think about that concept, right? Well, if that's where the last buyer bought, or this is where the last seller sold on the low, then until there's more sellers on the past that low point, or more buyers willing to pay above that last where the last buyer bought, okay, that's your frame out. That's your high low frame out, right? And so what we would be looking for is, if we're looking for price to break higher, what is it going to need to do? Somebody out there has to be willing to pay higher than where the last buyer bought previously. All right. Now, yes, it is true that the buyers that bid price up there got absorbed by sellers, no doubt. But you don't know how much is for sale, do you? At a particular level, you have no idea. I have no idea how much is sitting there for sale. Yes, there's some ways to look at on Bookmap and some other places, but again, a lot of that stuff is very it's designed to fake you out, right? Looking at orders sitting on the book. Oh, there's a lot of sellers there. Oh, there's a lot of buyers there. Again, take that with a grain of salt when you're looking at orders. What you want to focus on is what has traded. That's the important part. What has traded, not what somebody's sitting on a book, on a book map, or on the order dom. Oh, look at that. There's 2,000 to buy. That's more likely it's fugazi that it's 2,000 to buy. They're probably trying to just show that there's, now they're real orders, I'm sure, but they can be, spoofed in a heartbeat. All right. So again, what's on the book map at levels, take it with a grain of salt. What has traded is most important. So this high up here, okay, somebody bought it up there, and yes, somebody sold it to them, but we don't know how much is for sale. No idea how much is for sale. Down here to the buy on the sellers when the sellers knocked it to the low. Yes, did the sellers get absorbed by the buyers? Yes. Do you have any inkling of how much was to buy? Nope. What we do know is at that low price, sellers did get absorbed, and then the last seller sold. And then there's no more sellers below that level, vice versa on the buy side. Right? So that's kind of how we look at how I was taught. And by the way, I was taught that way from the investment banks when I was a young kid in the business. Right? Going back 42 or 43 years now. Right? All the way back then in the early 80s, that's how I was taught that a high, or if you want to call it resistance, it's not necessarily resistance, it's just where the last buyer bought. So until there's a new buyer above that level, you want to use that reference as the spot where that's your risk point. That's why everybody clusters, stops, right? Above highs, stops, okay, below lows, because that's where the last seller sold and that's where the last buyer bought. I mean, this is all basic stuff, but some of you may not have ever heard about, well, how is a high formed or how is a low formed? Yes, the trades, and that's where the final print was. But what does it mean? Can we place some sort of meaning on that, right? Yeah, I learned that because it was before computers. you know. Well, we learned it. I didn't learn it from the internet. Let's put it that way, right? I learned it from mentors, that were doing that years before me, and they learned it from others years before them. So it's kind of passed down, from generation to generation. Now with the onset of the internet and everything else, there's a lot of misinformation out there. A lot of misinformation, at least from my perspective. So, so I'm kind of certainly old school when it comes to this, but also what's also, and again with I like candlesticks. You know, whatever you just did now improved the audio greatly. Thanks, JB. From yesterday or just from a short time ago? If the audio starts getting wonky, please let me know because I know what I would need to do. Oh, from a minute ago. All right. what happens is also, by the way, okay, so I've been in and out of the submarine tunnel all day. All right, we're perfect now. All right, if I get the submarine effect, all right, let me know. Because what I have to do is I have to reset my mic. All right, let me reset my mic now anyways. I guess I'm getting some reports and muffled sounds as well. All right, stay with me. Yeah, no, JB, thanks a lot. No, again, I want to make sure that I was having issues yesterday. Um, so one second. Okay, how about now? Let's do a check, mic check across the board. I reset my mic and just make sure we're okay. Okay, it's good for one side, perfect on the other. Okay, great. Super impeccable. All right, I like that. All right, good. Yeah, please let me know if anything kind of messes with my mic because I know what I need to do now to reset it. And sometimes it's the internet kind of fluctuating back and forth. Uh, but if it gets too out of, if it gets too wonky, you got to let me know, please. All right, I want to make sure that everything works out. We're running smoothly. All right. I'm a one man show over here. All right, for the most part. Oh, the other point I was just going to simply make is I like wicks. Okay, wicks tell a nice little story, right? You can see these wicks over here, right? John Wick, I call them. I call these John Wicks. Everybody know John Wick movies? I like John Wick. So the John Wick movies, all right? Obviously, I simply call them, I've always called them what are called long tails, right? So, wicks, long tails, whatever you want to call them, shadows, whatever works for you, right? But the idea is a long wick tells a nice story, right? It tells us that, uh, control was reversed at the end of that time period. And that could be, very telling. You don't even have to look at order flow. Order flow, by the way, I know there's some people out there that, really monitor order flow very closely. I don't find order flow today as useful as it once was. Still useful to a degree, but it's not as, I don't use it as I once did. Uh, but it's still, when I say order flow, I'm talking about the footprint chart, trades that have already taken place, not the DOM. I don't really look at a DOM. Uh, Again, there's no reason to, you know, at least from my perspective. But looking at, a candle chart with wicks, those are very important. Of course, various other formations in the candle arena. But again, not every candle is significant, but it tells a story, and it's always good to have some understanding of what's happening, right? To help us make a decision. Right? Again, I'm talking very much, in the discretionary world, which most people tend to be in terms of their trading. Delphine asks, David, did you study the cycle, including three sessions, U.S., Asia, Euro, as we never have three sessions back to back in the same trend? Will we have a session? Okay, so over here on this particular chart, okay, this is my profile chart. Now there's a lot more going on here, but I'm gonna, what happened? Hold on. Here we go. So here on this particular chart, I have the Euro, Asia, and the US session split. Just use my little thing. So, all right, so this one here was US yesterday. Okay, here's Asia and here's Euro. Okay. So the way I look at the 3-day cycle, um, I look at it from all sessions combined, for the most part, all sessions combined. You can um, split it down into RTH session only. We don't split it into Asia only or Euro only. So I look at it as all sessions, right? So Asia through, US primarily. Occasionally I'll narrow it down to the US only RTH session. All right. But you're right in the sense that going from session to session, we typically will, each session is going to be obviously independent, of themselves, and you want to treat them independently. But not only that, is there are some relationships between, when one session finishes and the other session begins. Okay, you want to reference what happened in the prior session. Oops, something just happened here. All right, let's quickly see if there's anybody have any news out. Looks like that was a pretty aggressive move. Probably something with overseas. Did they finally sign a deal or something? I don't know. That's a pretty aggressive move. And right now the the charts are slightly lagging. Yeah, it must be something overseas. Oil just cracked big time, down at 87 right now. What do the feeds say? Trump is reviewing the proposed nuclear negotiation framework. Okay. Okay, here we go. It includes unrestricted shipping in the Strait, and Iran have reached a deal on a 60-day ceasefire. Okay. The proposed deal includes unrestricted shipping. All right, so Straits of Hormuz being opened. But what does it say about the nuclear dust and stuff? 60-day ceasefire. I don't see anything about nuclear dust, which is supposedly a big part of this whole thing. Yeah. Who front ran this? All right. Yeah. So there's a lot of stuff going out there. Let me. It also says. Let's see. 60-day window will be how to dispose of. Okay. So there's something to the effect that during that 60-day ceasefire, they're going to discuss how to dispose of the uranium. All right. Well, let that play through. All right. Okay. In any event, sorry about that. Let's go back to our other charts here. So after the discussion of our cycle, it looks like on that flip, all right, everything got long pretty quickly. The 810 there had gotten stopped out on the trail, so that turned out to be a nice trade there earlier. And then everything flipped here to the long side pretty aggressively. All right, and that's where we currently stand here on the long side. Right? Shipping will be unrestricted. That's huge to try to get everything, all those, again, the goods, the products out there to the various countries. Yeah, no question. Obviously, a positive development. So good, good, good. All right. Obviously, market likes it. You know, I think the market had quite a bit of confidence, anyways, that that some sort of deal was going to be reached. Again, that uranium is still a big key issue of it, but getting that straight open without fear of attacks was also really a big part of that to kind of get that the economy the economy's running again. You know. Anyways, the devil's in the details, as they say. I don't know what it is. You have to let the market, marketplace figure it out. But obviously, it's good. Oh, new all-time highs. I mean, day in and day out, it seems. Boy, those shorts are getting roasted, aren't they? All right, so back up to the prior high here, 70.75. Now, what's also on deck here, if you take a look at the left side chart, is D level at 75.78. So that's also kind of another um, you know important level that we look at. What do I want? 75. 78. All right, so a little poke above the prior high. Would that be? It's pretty fast for that kind of look above and fail. I didn't have an order sitting there. Sorry about that, but I didn't. I don't think anybody. Some people maybe have been prepared. I was not prepared on that one, but we did have longs here. All right, and we are working the long side at the moment. All right, so on these two. So this was on the right hand side. Those are discount long. Again, this is where the algo, what we call the ATA, the auto trade assistant, really comes in handy for us, because when the market kind of makes a aggressive move like that, um, it's it's certainly extremely difficult, to react and get on board, right? I equate big moves like this, real quick moves, to if you heard, let's just say you go to the 4th of July fireworks, right? What are you expecting? You're expecting the sound of like fireworks, right? Bombs type of, sounds. You're expecting that. So you're not shaken by it in any way. But let's just say it's not the 4th of July. You're not expecting that. You're somewhere out in a public arena gathering, and you hear the same things. What's going to be your reaction? Probably much differently than the 4th of July, right? And so when you think about it that way, when the markets make a quick move like that and the algorithms just take off, it's to me that's kind of what's happening. Is it's like you're in a public, and all of a sudden, ba boom, ba boom, ba boom, or bang, 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 like sound of gunfire or anything like that, right? You're gonna be startled. You're gonna react in a way to, kind of a protective mode. And so in trading, it's very similar in that if something's happening that you didn't expect, and it's happening super fast. And so, the reaction is probably not, oh, I'm going to go buy those, boom, 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 in a very, very quick way, right? So what do you tend to do? Do nothing, right? You know, trying to what you're trying to do is your brain is trying to make sense of what's happening. And so a lot of times you freeze because your brain is trying to catch up. Things are moving so quickly. So with an algorithm, with the auto trade assistant, if it meets the criteria of a trade, it's boom, it's in. There's no thinking. It's just going to do what it's going to do. You know, so something a little bit different than perhaps that you would normally kind of expect or react to. Oh, thanks, Mark. Okay, good. Things are much better on the audio side over there. All right, terrific. Thank you. I think two things part of that, and it would cause the mic. One was my mic itself, so I had to kind of reset my mic, and then two could be kind of the internet sometimes kind of gives you the little submarine Alvin, the chipmunk sound. So if I do sound like that, remember, make sure you tell me right away because I'll reset the mic. All right, good. Uh, so far, thanks for all the questions, everybody there in the pit, and everybody also in the PTG participating with that. A lot going on. trying to keep, one of our premises is to stay in alignment with what we refer to as the dominant force. We don't look to counter trend trade. Stuart asks, so what is the rough record of the two best algos? Um, so on our website, I don't track them actively any longer, but on the website, PolarisTradingGroup.com, for our members, we do have a strategies model performance report. And so they're different, obviously, right? They have different track records, but they're all designed to stay in alignment, number one, with the dominant force. Okay. The thing about performance, I'm just going to mention this, and when somebody asks me there, like Stuart's asking me, when somebody asks me that, I don't right away just give the stats for those. And the reason is not that, and I have stats on them, but the reason is you got to understand how the stats are created. That all the stats happened, during a unique period of time. And a lot of the times, the question I also get with that is, can I, am I able to reproduce those stats? And my answer is no, because that was a unique period of time under certain conditions and the way certain things were traded, okay, were managed. So it's very difficult to reproduce those. Giving you stats, histories, is useful to a minor degree in that, okay, it does demonstrate that the histories of the algorithm or the strategy itself, not necessarily the algorithm. Some of the strategies or the performance of the strategies were not always directly with the algorithm. A lot of it was done by hand, okay, manually. We've only introduced the algorithms probably the past few years, anyways, right, to be a little bit more aggressive there with those. So if I tell you that the historical over uh, a 15-year track record, that the profit factor, okay, the profit factor is 2.8 or 3.1 or 1.7. What does that do for you? Does it do anything for you? It just shows you that it just shows that that there's efficacy in the strategy. And here's how I do the strategies. Here's how I've tracked the strategies. Okay, I'm going to explain how I track my strategies historically, and you tell me whether it makes sense or not. Okay, so you know what a 1-to-1 is, right? 1-to-1 reward risk ratio. All right. So the idea of our strategies is this, the way I've tracked them over the years, right? Everybody has the ability to get the same entry, okay? And then everybody has the ability to exit, right, at +1. What is +1? +1R, one risk unit. Stuart, you tracking? Everybody else tracking? Okay. So this is how I've tracked the performance of the strategies over the years, meaning that everybody has an equal opportunity, equal chance. If we all took the same entry, so any of these trades, for instance, right? If we all had the ability to take the exact same entry
at the exact same time with one contract, not two, not three, whatever, one contract. So the way I tracked it is everybody has the ability to get in at the same entry price, and everybody has the ability to exit at the same first exit price. Okay, so maybe the first exit is, +5, all right, points, not ticks. +5 points. That's exit number one. So that's how I've tracked it from the beginning. Everybody has equal opportunity to enter. Everybody is exiting at the same time, and which is a 1 hour value, and then in which in this case would be an example of 5 points. Okay, and then I track that performance. What it doesn't track is anything above 1 R, 2 R, right, 3 R, right, and so forth. It doesn't track that. Why? Why don't I track that? Why don't I put 3 contracts on and okay, I'm going to scale at +10. I'm going to scale at +15. You know, why don't I do that? Why haven't I done that? Because I don't know if you're going to, let's put it this way. If I scaled out that way, or however way I decided to scale out, there's a lot of decisions that go into um, taking profits out. Okay, beyond at the first exit point, I call that risk free. All right, that's where we get risk free or 1 R. Anything above 1 R, I refer to that as alpha, right? Profitability. 1 R means I've covered my cost of the trade. Anything above the cost of trade is alpha. All right. So that alpha, that profitability above break even or that risk free is really variable. It's a huge variable depending upon how each individual trader manages it. And what I cannot expect is if I manage it in a certain way that somebody else, Stewart, for instance, which he's asking a question, I cannot assume that Stewart is going to trade it the exact same way. Even though I may lay out the parameters in the exact same way, I can't expect Stewart or Raj or Danny or Delphine or anybody else to exit in the same fashion. So I've never measured it that way. But everybody has an equal opportunity to enter the trade where it's supposed to be entered and to exit at the first point, which would be 1 R. Does that make sense, Stuart? So I wanted to give you a background of how I measured over the years my performance. Now on our website, for members, we have access, to all those figures over the years. I don't track them anymore. I have well over 10, 12 years of tracking, and tracking, keep tracking them is not going to really change anything any longer. I mean, I got over like 10,000 trades or something in there. All right, so there's nothing more to track essentially. Okay, uh, what's important to take away from a lot of this stuff is that it's nice to see trades on the screen, winning trades, losing trades, whatever. Again, we get another winning over here. The idea is not so much whether how many wins, how many losses, but what's the magnitude of the win, what's the magnitude of the loss. Okay, and um, and so that's called expectancy, right? Your average win over your average loss over a series of trades. All right. So basically, let me just kind of scoot back here. So in terms of your initial question, which 2 algorithms or which 2 strategies? So our CCI crossover system, which is our premium and discounts, as we spoke of earlier, right? This is an OG. This is an original, right? This was my first and foremost. This still continues to do very, very well. And again, I can't put a number on it necessarily because it's not really going to matter a whole lot, right? But that is still very high on the list, right? And then the next one, and again, they're not necessarily one's better than the other, right? They're different, is our ATR strategy, which is essentially what you see over here on the left, all right? And the CCI here is what you see here on the right, right? And that's another part of our, and that's very, very good too. You know, big check mark there too. Very, very good. It's not without its stop outs, all right? But it's not about whether, the win loss ratio, it's the expectancy. What's your average win versus average loss? Okay. All right. So that said, and then the last category is what we call stackers. All right. Now this one's a little bit more discretionary. These are the three categories of PTG strategies. Right. They're categories. Each of them has a subset, but they're basically that's the category. Stackers here are designed to stay. They're kind of more of a breakout kind of play, right? The ATRs and CCI are more of a pullback, all right, type plays. So market moves up, we're looking for a pullback. Okay, we want to get in on that pullback. All right. So the specifics of those, whether it's the ATR strategy or CCI or the stackers, again, we have detailed information in regards to that on our website in the educational material. So I'm not trying to avoid giving you specific statistics, Stuart, but the numbers themselves aren't really going to do anything to justify or true justice of them. Um, what I like to do and we do every day is we demonstrate it every day in our room. Okay, what's happening, and again, each individual trader's performance is varied, right? Is truly varied. All right, but what they ought to do. Oh yeah, going back to when somebody asks me, can I replicate those results? And of course, my answer, as I said earlier, was no. What I said, you're asking the wrong question. It's not about replication of a strategy. It's about if you begin to execute a particular strategy, are you able to correlate your performance versus the historical performance of the strategy? Okay. And again, that's it's the correlation factor that we're looking for. You want to be as closely you want to have a correlation as close to one as possible. But in many cases, whatever the strategy did on the historical framework, as I mentioned earlier, like one to one, individual traders should do much better. Why is that? You should never do worse than the one to one. Never do worse than the historical one to one performance. And why is that? Because if you do worse than the one to one performance, that means you are not adhering to the stop loss strategy. As Manny would say, the stop loss protocol. You're not adhering to the stop loss protocol of the strategy. You're moving your stop away, or maybe you don't even have a stop, and you're letting your losses run greater than what the strategy, says to. On the flip side, to the positive side, you should do much, much better because you have the ability to go well beyond the one to one that the strategies are measured off of. Okay. So that's my long-winded answer. I'm sorry it's long-winded, but I needed to give. Anytime we talk about performance, it has to be it kind of has to be, discussed in a different way. Just giving numbers out does not just doesn't do it, you know. And so when you look at somebody's performance out there, anybody's performance out there, right? I don't care if they're been a professional money manager for years, okay? Um, use the performance numbers as an initial, hey, I want to take a deeper look at this, rather than, oh wow, this guy's had X percent performance over in a number of years. Well, I'm going to go with that strategy. All right, that's a mistake. What you need to do is you need to understand what that strategy is about. That strategy, could have gone years with losses, and all of a sudden, have a good year for some reason, or some anomalous year, and it makes up all those losses. And then that performance number now is like really good looking, right? That's a mistake doing that. What's the history of the performance? What's the kind of the overall kind of, you know, the risk matrix, you know, through that period, through those periods. Okay. Um, so you got to be, careful. So that's why I don't throw out just a number, because it's inefficient. It's to me, it's irresponsible, and it's misleading. And I don't mislead anybody here. Okay, never have, never will. I've been doing this so many years, you know, right? And when if you're looking at these screw tube people, and they're throwing out numbers, oh, I made 30,000 today, or I made this, I made that. Like, again, be very, very skeptical. They may have done that day, but again, that does not tell you a story. So we're not about that here. Never have been. Um, we're here to develop traders to try to become better at their craft overall. Stewart again follows up with, theoretically, you wouldn't keep running them if they didn't work on average. Yeah, of course, right? I mean, any strategy has to have some level of, positive expectancy, even in back testing, right? Even in back testing, it's important to have some level of, you know, understanding. Okay. Yeah, you wouldn't. Of course, you wouldn't. I mean, that would be kind of sadistic, wouldn't it? Just because you love a strategy, but if it doesn't have a positive expectancy, I mean, why would you keep trading that strategy? You just lose. You just mathematically, you're going to keep losing money, no matter how much you throw at it. It's not going to improve it. So, you need to have, some sort of a strategy that you can mathematically go back and say, yeah, you know. And again, when it comes to that, well beyond our conversation today, but there are this could be a good topic, I guess, for a breakout session where we have the community comes together and does a Q&A, and maybe, or specific topics. And this is another the other thing I've done this with Polaris Trading Group over the years. This is another thing kind of we're kind of formulating with the pit, um, is having some discussions on various topics, more detailed educationally, right? So that would be something that Manny and the crew and the pit crew. Again, we're in the process of developing a lot of this stuff. All right. We're not here to give you trades just so you can pass, a funding account, right? The PITBULL Trader funding account. We want you to pass those, but we want really more to develop everybody, have everybody develop into, consistent traders and so forth, right? Um, so yes, so you can, whether it's trading your own money, or trading funded type monies. All right, again, the whole point is trying to develop traders to be just become better at this. This is not an easy, business in any way. You know, Stuart says yes, would like that to topic on your algos. Yeah, we could again we could talk about that in upcoming arranged sessions and so forth. Work. I called them workshops. All right, over the years. All right. I call them workshops. So yeah, we can certainly do workshops and stuff. Did you try to develop your algo with AI or to improve your own actual algo? I've never used AI with my algorithms, Delphine. All right. All the development of those was um, long and arduous. Let's put it that way. Long and arduous. I think AI has certainly a role, uh, in all these different, development processes. Um, but I would be very still, I'm exploring using AI today in various aspects, not necessarily in my algos the way I've developed them, but in other areas. So I'm still somewhat, in the learning stage myself. But I think there's a role to play, no doubt. But also, what happens is I'm old school. Okay, I'm 65, been doing this for 40 some odd years. I'm old school. I take the long road. I don't take the short road. I learned from some of the best people, right? In the process of how to do this and stuff. So it is long and arduous, but you start off with an idea. And yes, you may use AI to validate an idea. Is there some efficacy to your idea? So you may create a small example model using AI. But what you need to do with AI is, you need to give it that information. And so there has to be, a level of input. And then, yeah, it will do it very efficiently in terms of time versus when I did it years ago. I mean, it took me months, you know, to validate an idea. AI, can certainly at least get you started, whether or not there's some efficacy to an idea. And then once you're at that point and say, yeah, okay, there's some efficacy here, I'm going to take it to the next level, right? So I have not in any way used AI to work on that. So I'd be cautious, if I was to go down that road. But in the work that I've done and what we do everything, it's all the longhand approach. But here's the thing about that as well. When you're developing a strategy, you really don't want to just, delegate it to an AI. And the reason is this, at least in my view, when you just give it to an AI or the computer or whatever, um, you miss out on the subtleties of developing that strategy. It will spit you out numbers and results, but what went into those results? What happened on a particular day? Is there something that you could, the rhythms change all the time in the market, right? And so, volatility levels change. Well, this strategy works perhaps in a specific volatility range. But what you need to do in the development is what's called, right? So you start off with a hypothesis, you get your efficacy, and then you do maybe a little, back test, okay, and let the computer do a little bit of that work for you. Kind of gives you some numbers, but the numbers are not, what again? What do the numbers mean, right? So what you need to do is you need to begin to forward test it. You need to do it, in simulated mode, but you need to do it live every day, like in real conditions. All right. And there's always going to be variations and modifications that you're going to end up making to those based upon what you're observing in real conditions. See, what people need to be cautious about AI, at least from my view, is the human has the ability to observe in many ways still better than AI. You get a sense, or you kind of see something. You can't describe it necessarily, but you kind of see something happening, right? In the way something unfolds, or the hair on the back of your neck goes up or something. Something hits you, but you don't know exactly what it is. But your brain does. Your brain is registering something, right? And it's a sense. Well, AI doesn't have a sense. At least I don't think so yet. But so when you start forward testing these things in real time, you begin to see the nuances of how it reacts in various conditions. And of course, you record those and you make some notes and things like that. All right. Does that make sense? It's a process that most people do not care to go under, care to explore. Most people, particularly some of these young people today, perhaps they're much more, advanced than I am in any way of using the AI. I mean, like I said, I- I'm I'm old school, right? But I can still learn, the use of AI and the benefits. I see some of the benefits of those AIs. And the younger crowd today, I mean, they're just, you know, I mean, I'm in the grocery store and I see, a 3-year-old in a carriage, and they're whipping through, on their thumbs in their little mini computer. I mean, come on, all right? How do you compete against that? I mean, the amount of, what the young crowd learns today versus, where I'm at, it's light years different. But doesn't mean I can't do it, and doesn't mean what we've developed in the past, isn't really effective, right? So there's a role. At the end of the day, I think there's a role that AI plays. I'm not going to comment on whether it's, I hopefully it's all uh, benevolent, all right, in the scheme of things. But there's definitely a role. I'm exploring that in various ways. You know, AI could learn the type of day and act accordingly. Again, yeah. I mean, it's, can be certainly learning machine, that way. But you have, you start off with certain. But here's the thing, right? As I discussed earlier about just understanding what the 3-day cycle we're going, I'm assuming you're talking about the cycle, right? The day type, right? Um, and so, there's an expectation of us of what the behavior of a particular cycle day is likely to unfold, or inferred, right, to unfold as. So what you have to do is you got to compare in real time. So one of my goals very early, literally within the first 15 or so minutes of the day, to establish what the lean is, right? Not for the entire day. How can I do that? But for the initial coming off the opening, what's the current lean? And given that, what would be the expectation of trade opportunities on a given cycle day? And again, that's something that I've learned over the years, right? And it through experience. You cannot replace experience. I don't care, you just, even with an AI still does not have the experience that a human person does, in whatever area we're talking trading. So in that area, does not have doesn't have that experience, right? So don't replace, yourself and your experience, with the AI. Like I said, it's a tool. I look at it as a tool, but it's not going to replace me. Nobody can replace me in my experience and what I can convey over my years of experience to help teach somebody going forward. Okay, I can only put so much on in a video or on paper or whatever, but again, asking questions, it's the experience, it's the conveying of experience, it's experiences that you can then convey that I have gone through over the years that the AI would never go through, have never gone through. So yes, there is a role, but you know, um, yeah, you definitely have to continue the back testing. That's where between back testing and forward testing, and like I said, that's where you see, where, hey, I think I can improve upon it by doing this. And then when you go down that road to make a change, when you start making modifications to an existing strategy that it's in its infancy, you start making modifications, make one modification at a time, one only. And then when you make that one only modification, now you have to test it for another length of time. Now, again, you can use AI for something like that, right? Give it some instructions and then see what it spits out. But don't just take the results of those instructions and say, okay, Goon, that's done now. Okay, I'm gonna move it. I'm gonna go into another one. Oh, I like the results there. Okay, I'm gonna move into another area. You really, if you do that way, you're doing yourself a disservice, huge disservice. Okay, what you want to do is piecemeal, and then you want to test it, and you want to, work with it, and you get to understand what it's doing, right? And again, all this stuff takes a long time, you know. Right? It's during the forward testing phase that you learn about what that strategy, is doing. And of course, you have to record some results and take notes and things. And again, it's a long process. As what I said earlier, most people, they don't even want to go down that road. Give me the shortcut. Give me the cliff notes. How many of you were in school, right? And I'm guilty of this, right? You had to do a book report. And I know everybody has gone through this. Right? You had to go a book report, and the book's like 300 pages, and you just don't have time to sit down and read that book. So what do? Oh, I'm gonna buy the Cliff Notes or the Monarch Notes at the library, right? And it's gonna give you, you know, the core message of the story, uh, you know, the protagonist, and everything. So then you can go write a book report about it, but you don't have to, geez, I can I'll read a 20 book pamphlet and write a book report. How many of you have done that? I'm guilty of that when I was younger. So in that same vein, I think there's a lot of people out there that, yes, want to make a lot of money and want to do well trading and so forth, but it's going to take a lot of effort and time to really, especially with strategy development. Now, on the flip side, if you're not interested in doing any of that, what's your alternative? What's your alternative? I'll buy somebody else's strategy, right? You know, hey, this guy PTG, he looks like he has a pretty good strategy. I've seen some real good trades, while observing, uh, his demonstration. How much does it cost? I'll buy his. And again, that's another road because hey, this guy's obviously done a lot of work. He's gone through that process. I don't have time to go through that process. So what's the alternative? I'll buy somebody else's. You know. Large Void says, what's pre LLM? What does LLM stand for? If you don't mind me asking. Okay, AK machine learning. Yeah, okay, I got it. Got it. Machine learning techniques are at least quantified, right? Large language models. Okay, thanks, Large Void. Okay, great. Yeah, the Claude and okay, great. Now I understand. See, you're teaching me stuff. The AK techniques are at least quantified, right, and provide stats on performance of training data, right? The LLMs are generating theoretical strategies, which you can then have to implement, back test, and forward test. Yeah, exactly. So that's the idea of having an idea, using AI to kind of give you that, give it the basic outline, see what it spits out, see if there's any efficacy to it, right? So that the learning part of it, right, and then give you some data, and then work on bringing that forward, right, with the future testing and so forth. All right. And market conditions can vary dramatically over time that impacts the performance. Exactly. And that's the thing, and that's why when I've done all my testing over the years, it's just taken a long time, a very long time, because you want to experience them in various market conditions, various volatility conditions, and you can kind of like, hey, this strategy works best when the 30-day VIX is between 18 and 20. Okay. All that. Oh yeah, sure. So Stuart asked just if you can explain the algo. Sure, absolutely. So okay, so we're in an up move here, right? We're in a directional up move. All right, that should be fairly straightforward. So what happens here? This is a discount. All right, DISC, and you can see the labeling here where it says DISC. So that stands for discount. Okay, so a discount, right, is a buy. Simple enough. Okay, great. What we're looking for is, since the market is in more of an upward trajectory, okay, we're looking for price to pull back. Now, what happens here, this is our CCI, this is our version of CCI, Commodity Channel Index, all right? So the CCI comes down into what we label over here as discount land, discount level. So when price reaches the discount, or excuse me, when the oscillator reaches the discount, all right, this tells us this level in price is the most efficient entry point on the pullback. Okay, statistically. Again, you know, um, everything that I've done and learned from the investment banks has always been from a statistical viewpoint. All right. We don't just like, hey, Rocky, watch me pull a rabbit out of the hat, and the reason why I do something, it's from a statistical uh, basis. Okay. So would you agree, Stuart, that in an up move, right, a pullback is an acceptable way to enter a trade on a pullback? Okay, good. Now, the next question is, well, how far of a pullback, right, is a pullback enough? At what point in a pullback should you enter a trade? Not as easy answer, is it? You understand buying a pullback is, yeah, hey, in an up move, I want to buy a pullback. Okay, we all agree there. The question is, okay, where? When? Not as easy answer, is it? Would you agree? Yeah, not an easy answer. Okay, but buying a pullback is all acceptable. Okay, great. So what I do and what I've developed with the CCI, what does that do? Okay. Hey, Manny's back. Great. His twins graduated 5th grade. Congratulations, Manny. Woohoo! All right. Good job. All right. You're doing a good job as a parent there. So let's just quickly get back to this, and I'll hand the baton there over to Manny. But so going back to Stuart's question about this. So what I'm looking for here is a pullback. We know that. At what point, or what is the best point in the pullback to enter? So what I've developed here on the CCI, okay, is statistically on a pullback, this will tell me at what point in the pullback from a statistical reference, it is the most efficient point in the pullback to enter the trade. Does that make sense? All right. So we get that. And then what it does is it generates an auto signal. There's no delay in this signal, by the way. It is live, real time. And it generates this structure signal in here. Okay. And then what we've done here is the algorithm, all right, the ATA, right, the auto trade assistant automatically executes that based upon certain rules that I've set out, the criteria for the trade to unfold, for the algorithm to take the trade. All right, so my direction of the algorithm, what I want the algorithm to do. And like I said, it just does it, no questions asked. It meets the criteria, boom, enter the trade. So that's what this trade was. This was a pullback. Okay, so prices moved up, it pulled back into a particular discount zone. All right, and what it does is it not only gives us a visual reference text. Okay, there's also an audio. You don't hear it here today, but there's an audio alert for that as well. All right. Do we have to buy the algo? The algo is provided by me, Polaris Trading Group. It is not part of the room here in terms of PIT. Okay. If you want to, if anybody is interested in learning a little bit more, want to talk to me personally about any of this stuff. Oh, in my room? It's not part of my room. It is part of the what we call our trader toolbox. Okay, our trader toolbox. And generally what I like to do is if anybody is interested in learning more about the details of all of this stuff, remember, even if you're using an algorithm like what we have, it's in a okay, so let me just say one last thing about this. The ATA, it stands for Auto Trade Assistant. Okay, Auto Trade Assistant, and the operative word there is assistant. So it's not a black box, right? Algorithms. So some places out there sell black box algorithms, right? It's not a black box. What it's designed to do is to help you, assist you in execution. Um, but in order for it to do it effectively, it needs to be part of a plan, right? It needs to be part of a trade plan that you've developed and you understand what the CCI crossover system, which is really what this is, it's a CCI crossover system. All right. The algorithm, the ATA, is a overlay to execute the order, you execute the strategy. That's what the ATA really is, right? So you need to understand what the strategy is, and that's part of my educational, you know, world over at Polaris Trading Group. Okay. So if it's something that you're interested in to learn a little bit more about, then drop me. You can drop me an email. I'm happy to talk to anybody about it. Again, like I said earlier, I don't force. I'm not trying to pitch anybody of anything that we do. I'm just demonstrating what we do and what we have and what we use every day. If it's something that can excuse me, you want to explore, that maybe it helps you in your own trading, I'm happy to have a conversation to with it about it. So we can go there. Um, so if you want to, I'll just put this out there. Let me put you my email address. 1 second. I can't read here. All right, so David at Polaris Trading Group. Make sure it's 2 G's there. .com. All right. And oh, that's also my avatar, by the way, is Algo Hunter. All right, I created the Algo Hunter avatar as I was building out the algorithms here, and so I built out what's called Algo Hunter as a as kind of an avatar. But actually, let me post it here again. There you go, PTG David. All right, we'll take that off so we don't confuse you. There we go. All right. Hopefully this has been informative, profitable. Again, a lot going on today. We had some good, actually some very nice trades. So happy with that. It's always nice to be able to demonstrate, what we do, how we do things, and the market cooperates. So hopefully you've gotten a little bit of an insight, and I thank uh, Manny for allowing me to fill in for him today. And again, I want to congratulate Manny on his great parenting with his children there. Graduating, was it the fifth grade? I think it is. You said, yeah, twins. So congratulations to Manny on that. Super. You know, and again, I come in on Wednesdays, okay, with Manny. So hopefully you'll have better understanding of the stuff that you may see on my screens, when I fill in. And what I'll end up doing occasionally as well, um, is just jumping in at times. It would be it in the morning or the afternoon or wherever it may, where I can fit in. Um, if Manny needs to take a day off, I'll fill in for Manny. Manny does a great job, right? As you know, as you all know. So we all have different styles, and that's kind of the also the idea here with with the pit room. It's you know it's kind of a you have a taste of everybody does things in a little bit differently. We're all disciplined. We all have techniques. Maybe some of the stuff that you're interested in learning more about, and that's part of the educational edge that what we're trying to provide in the pit room and PITBULL Traders Funding, right? Remember, we have the PITBULL Traders Funding, um, available for everybody. So if you haven't taken an evaluation there, check it out, right? See if it's something that that's worthwhile for you. Um, but we're not just providing access. You can get access to funding programs everywhere, right? What we're trying to do is we're trying to meld you know the two together in that helping the traders become better at what they do, having a gateway, right, a funding gateway to test out what you're learning, test out what you're learning. And we also have one-on-one coaching if that's something that you're interested in at some point. So there's a lot of broader programs and stuff that we're going to be continuously implementing. We're still in our obviously infancy stage. We're not trying to compete against all those others that are out there right now. Then who they are, some of the big funders and stuff. We're not even looking to compete against them. All right, we're not interested in that. We're interested in doing our own thing, generating our own communities. All right, we're not on Discord. Okay, we have our own private community here that's part of the Mr. Top Step umbrella, and we're trying to develop a community that wants to be here, likes our style, likes our rhythms, likes the vibe of the room. We're not trying to be entertainers, right? And all the ones that are out there that are just entertainers, right? But we do want to have fun. We do want to it's serious business, but we want to have fun. We want to enjoy being together, right, and helping each other's out. I've always, I'll leave you with this. I learned years ago, um, if I'm carrying a candle, okay, and well, you've seen it, in memorials, you've seen people standing around, together, right, with candles, right, mourning, the passing of somebody, right, being together. Well, if I have a candle and I pass it over to Delphine, does my candle get extinguished? No. Then Delphine goes over to Stuart, and then Stuart goes over the large void, and so forth and so on. And guess what? None of our candles have been extinguished. We've only brightened everybody, the whole. So that's kind of the idea I look at when I try to pass along my knowledge, right? And people say, and and this is something that like we can easily dispel. The old adage is, oh, if he can't trades, he teaches. That's bullshit. All right, that is absolute bullshit, and we'll prove it every day. So again, thank you for your attention here. This session is going to be has been recorded, by the way, and on my end. So what I'll do is I'll provide that recording to everybody once it's rendered in the pit room as well as our community here at Polaris, and then that way all the concepts and questions and things that we spoke about today, you can review it, and hopefully that becomes helpful to you at a later date. All right. All right, Manny, are you is Manny online here? Does Manny want to come back on? Um, Stuart, I'll post it here in the room when it's ready. All right, I'll render it. I'll make sure everybody gets access to the video link. All right. I record, by the way, I record my sessions over at the PTG community every morning. So I'm only basically record the morning sessions, but I record those every morning. So, and I maintain a history of only 5 days. Okay, so but there's many other videos, on our website. I'll provide all those links a little bit later on, all right, or I'll re put them out there tomorrow. All right. But again, if you want to reach out to me, you have my email address. Um, I'm going to uh, I'm going to cut out here. I don't know if Mandy wants to come back on board here. I believe we have Bo uh, coming on at noontime as well to host the noontime session. I think that's the case. I think that's the lineup. And but I think we'll be good for here. So if nobody has any further questions, I will bid you a adieu. And again, thank you for your attention and participation. Um, Engagement is really critical, by the way. Just one last note. I have several last notes, but engagement is really critical. If you don't ask questions, you don't get answers, right? If you see something that's interesting, hey, what's that about? Ask away. This is what we're here, to do. Right? And one final note, because Manny's mentioned this many times, we're traders first. Okay, so our primary directive is to trade. Okay, secondarily, again, you have the benefit of viewing what we do and how we're doing things, and then secondarily, educational questions and so forth. Typically, after a trade is complete, hey, what was your thought process on that particular trade? What were you looking at? That's kind of the educational, read through that hopefully we'll be able to provide everybody in the communities going forward. Right? All right, very good, everybody. I'm going to be taking down my charts, so unless Manny's going to put up his for a period before Bo comes on board, but we may have a short period of break in between intermission between presentations. So stick around, get some refreshments, and for the next show, for the Bo show. All right, good enough. Thanks everybody for your participation. Have a great day.